Hello there, my friends. Chris Marcus from Arcadia Economics here with you today on Tuesday, September 19th, which I'm sure everyone is excited to know is also doubling as International Talk Like a Pirate Day. Arr! So, with that said, today we have a quick video about Ray Dalio, who is a pretty well-known investor. He heads what is Bridgewater, which, yes, is the world's largest hedge fund. I thought that it might be, and that's what the CNBC article is saying here. Have about $160 billion under management, so certainly a successful investor. And I've come across a couple news stories involving him recently that I thought, especially in today's environment, could be relevant. As I was reading them, they were impactful to me. Certainly some of the challenges I'm working through in life, and think that everybody is, especially anyone who's participating in these markets, which aren't the simplest thing to resolve right now. But anyway, every once in a while I have a few good ideas kick through. And one of the things that I've always found most helpful, not just in investing, I'm also a musician. I found the same thing with playing guitar or really doing anything where I like going out and finding people who are already, whatever it is that I may want to do, who are doing it successfully. You look at what they do, what they found their keys to success, which doesn't mean you have to copy everything that they do, but certainly you can learn a lot. And along those lines, let's dig into a few comments that we found in these articles here about Ray that hopefully will be more helpful than anything that I could add here. Well, hopefully I'll be able to add something of value too. In either case, he starts mentioning that he actually went broke 8 years after he started his firm, yet he felt that was the best thing that ever happened to him. The quote here was, "My failure was one of the best things that ever happened to me because it gave me the humility I needed." And apparently, I guess one of his turning points was how in 1982, he was confident in predicting the global economy was heading towards a depression, and he traded accordingly. Then he goes on to say, "I was dead wrong. The stock market began a big bull run, and over the next 18 years, the U.S. economy enjoyed the greatest non-inflationary growth period in history. My experience over this period was like a series of blows to the head with a baseball bat. Being so wrong, and especially so publicly wrong, was incredibly humbling and cost me just about everything I had built at Bridgewater." So, hopefully that doesn't mean that we're getting the current situation wrong, but a lot of what he says there reminds me of my feelings about the housing bubble 10 years ago. I remember sitting around thinking, I'd worked at a couple Wall Street shops, gone to Wharton Business School, and when it all happened, it seemed on one hand as if, wait a second, wasn't I the guy that should have been trained to have seen all these things? Fortunately, I was still breaking away from the Keynesian Wall Street conditioning and didn't see it. But again, that was another example where seeking out the guys that had seen what was happening, understanding what they were looking at that and learning from that, which is my understanding of what Ray is saying here. And sometimes those misses, not so much fun at the time, although in hindsight we can see how they're helpful going forward. Also fascinating, the example he mentions in 1982. Of course, that was following in 1980 when we saw gold and silver go to what were then all-time highs, which was a situation similar to what we have now, or perhaps more appropriately what we were seeing in 2011 before, as far as I can tell, you had a pretty blatant manipulation of the metals, which brought the prices lower. But the difference was that back in 1980, Paul Volcker came in and raised interest rates to 20%, and that's what I don't see happening this time, but why yeah, there were a lot of signs that a depression would have been coming. So Ray was right in seeing that, although perhaps the different type of central bank environment where there they actually do raise rates as opposed to always just cutting them like we have now. So now, one of the reasons why I wanted to mention that is because here in this same manner, 1980, 1982, where Ray felt he misread things, Ray has also recently become an investor in gold with his hedge fund. And we'll continue on here with his quote. Prospective risks are now rising and do not appear appropriately priced in. The emerging risks appear more political than economic, which makes them especially challenging to price in, which I would say I'll partly agree with. Certainly, there are the political risks, which are tricky to price in. I mean, are Trump and Kim Jong-un really going to start launching more missiles? They keep talking about it anyway. We'll hope that doesn't happen. Although it sounds from the way he phrases that perhaps I see more economic concern maybe than he does. Although in either case, as a result, the hedge fund manager recommended investors allocate 5 to 10% of their portfolios to gold. We can also say that if the above things go badly, it would seem that gold, more than any other safe haven asset like the dollar, yen, and treasury, would benefit. Interesting one there, where he says more than any other safe haven, the dollar, yen, and treasury, and perhaps that we'll comment on that one a little bit more tomorrow. But as I was reading that this morning, and people often say, well, why gold? Why is it important? And it's perhaps that sentence that he has right there puts it as clearly as you can, where look at what are the other supposed safe haven alternatives. Dollar, yen, two currencies that are printed insanely. I mean, Shinzo Abe basically was elected prime minister of Japan by promising to print insane amounts of money, which is exactly what he did. And, of course, the third one there is treasuries. You have the most indebted borrower in the history of the globe that every time a debt ceiling limit comes along shows no signs of having any inclination to repay that money. So, is gold in a sense perfect? Maybe so, maybe not, but what I guess always left me feeling comfortable was that, geez, if these are the alternatives and we see that, well, we don't know the timing, they have some serious flaws. Anyway, we'll get back to that tomorrow. But interesting to hear Ray mention that. And then the last thing we have here, Ray mentions the greatest tragedy of mankind is people clinging to wrong opinions. If you want to know the key to whatever Bridgewater's success has been, it's not me, it's not what's in my head, it's my ability to deal with what I don't know. Which I think is really timely advice, because certainly there's a lot of unusual things happening in the financial markets. The data is worse than ever, where there's almost anything that comes out of a government or a bank, you really treat with a grain of salt. What deals are these guys making behind closed doors that they don't tell us about? I mean, we can't even get a straight story about what's happening today, let alone 5 or 10 years ago. So, how I try to incorporate that anyways is that I've spent about a decade studying this alternate perspective of economics, digging into gold and silver, and becoming pretty convinced that those markets are manipulated. There is a problem coming. There are bubbles there. Although what I feel good about is that almost every day I'm still questioning and looking, is there something I could have missed? What are the other investors that I agree with saying? What are the guys that I don't agree with saying? Which can often be even more helpful, because sometimes someone may have a different view. Maybe they're right, maybe you're right. Although if you understand their view and can say, all right, how did he arrive at this conclusion? Are the steps logical? Do they follow? So getting those outside of it's that balance of doing your own homework, having your own views, but then also seeing if the people that you'd like to be on the same team with, if they're agreeing and seeing the same things. So along those lines, the fact that Ray Dalio is also getting into gold, certainly a good positive sign. Again, don't take my word for it. But what I hope I'm doing every day is giving some insight into how I've arrived at some of these conclusions, which I think there's a lot of credence to. But perhaps, I might miss something, or you might see something that I don't, which is straight in a comment and let everybody else know. But I think it's a good practice. Nice to hear that someone as successful as Ray Dalio has adopted that. Also nice to hear that he's buying gold. I sometimes wonder if some of these guys are aware of what's going on, particularly in silver and the manipulation. Because when you start getting into some of those bigger hedge funds, then now we're talking about people that actually could apply pressure on the market. So, again, just keeping you posted on what's going on. Gold and silver not doing too well these last 2 days, so we haven't hit that break point yet. Wish I knew when that would be yet. What we can do is look at what people who have had success are doing, analyze that, think about it, discuss it. And that's what you should do now. So leave a comment below. Thanks for watching, and we'll be back tomorrow, keeping you covered on what's going on in the markets. And thanks again, as always, for watching. I do appreciate that. Bye.